please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We also have Nilesh Shah, the Managing Director of Kotak Mahindra Bank AMC, joining us on the phone line. Good morning, Nilesh. Thanks much for joining us. There have been a bunch of statements, RBI and SEBI giving a statement that they are watching and will take steps. And just about 10 minutes back, the Finance Minister tweeting that they stand ready to help mutual funds, NBFCs and SMEs. Will this be enough to put a bottom to debt and equity markets?
So right now, mutual funds have enough liquidity. And on Friday, we have paid redemptions. Today also, all redemptions are going through. But it is extremely important that we take precautionary measures. Due to advance tax outflow, system has got deficiency of about 1,30,000 crore. And there is also reports about Campa funds which are lying today with banks, which will have to be transferred to government, both central and state. Now that amount could vary from 52,000 crore to 1 lakh crore. Now already we are in negative deficiency of 1,30,000 crore. And if more money is taken out of the system, and when money goes from banking system into government's account, it does take little bit time to come back into the banking system. So unnecessary systematic liquidity can get drained out and it becomes deficient. If system is illiquid, then obviously mutual funds and markets which are dependent upon that liquidity also faces that kind of pressure. And hence the statements are extremely important, which says that if there is any unnatural deficiency in system, it will be taken care of.
Okay. Nilesh, good morning. Whenever we ask you whether you are bullish or bearish on market, you say that, you are a realist. Right now at these levels, the kind of correction that we have seen, you think the market's attractive again?
Anuj, it's becoming attractive, but let's appreciate that over next 10 months, there will be enough bouts of volatility. Today, in this week itself, today tariff wars are becoming effective on $200 billion of Chinese goods. Then on Wednesday, we'll have US Fed giving their bubble chart for next year. And oil prices also, what we hear is that despite President Trump's request or threat to reduce oil prices, the response this time from OPEC has not been good. So there are so many variable factors, and hence one will have to be cognizant of his asset allocation and invest. Don't put all the money just because market has fallen.
Okay. Nilesh, hi, good morning. Coming back to the debt market, are we looking at a paucity of funds for lower rated paper now? Because retail investors perhaps could turn risk averse and then move to only high quality paper. Is that a situation that we could be staring at?
So will there be repricing of credit spread? Answer is yes. Clearly, we have been, as mutual fund, we have been operating more in AAA and AA kind of variety high credit papers. But their credit spreads had compressed because of a variety of reasons. Now I believe the credit will get repriced. The true blue chip companies will still continue to get funding at much lower rates. But companies which have little bit of doubt about their businesses, their credit spread will get widened.
Okay, so these statements, will that keep the corporate redemptions at bay, you think? Or will corporates nevertheless want to take away some money from funds and just wait and come back later?
Oh, more than this statement, Lata, it's your statement which will make a difference. When you say markets are calm, I'm sure people will listen.
Oh, come on, Nilesh.
So apart from verbal intervention, in 2013 actually we had seen when rupee had crashed from 55 to 70. At that point of time also RBI had made a statement that if mutual funds need liquidity, will be there. And that statement alone was more than sufficient to ensure that markets remain liquid.
Okay.
So my guess is that for the time being, the statements should be able to cool off the markets.
Sure. All right, Nilesh, always good talking to you. Thanks a lot.